Most investors say they want income, but what they really need is growth. Today we're breaking down iShares Core Dividend Growth ETF, ticker DGRO. It doesn't promise massive yield, it doesn't flash double-digit income, it doesn't sell excitement. So why do serious long-term investors keep buying it? I ran the numbers. We're looking at total return, dividend growth, drawdowns, reinvestment impact, and what DGRO actually does inside a retirement portfolio. Because sometimes the funds that look boring on the surface quietly outperform over time. Let's see what DGRO really does, so stay tuned. Welcome back to Simply Money. Today we're looking at DGRO. We're doing our all-in scenario where we take the hypothetical full income portfolio and we invest it in one fund. We backtest it from the date of inception till the current date to see how it's performed and where it would be at if we had held it for this time. We're going to look at different scenarios where we do the full drip, 50% drip, and zero drip. And then we'll do some of our calculations of a certain dollar amount per month or a percentage that we choose to see how it performs. Now, DGRO is a little different from some of the funds that we've looked at, being a quarterly payer. And I know that for some people that are income focused or yield focused, this doesn't ring a bell for them. I think currently the yield on DGRO is just over 2%, like 2.5 or 2.2%, somewhere right in there. This isn't a high yielder, but I want you to see the power of compounding and the power of dividends that grow. Because a lot of these funds we're looking at, we see the high yield and it's an immediate gratification. And we live in a world of immediate gratification. We want returns, we want them now. And people flip-flop around and you don't allow compounding to take hold. And you're going to see the power of even a small dividend, but a growing dividend, how that can really impact and compound in your portfolio with this fund. So stay tuned. I think you'll be excited to see the outcome of this one. We have a little more data with this than we do a lot of funds starting back in 2014. So we have about 11 years that we're going to be looking at. And before we get started, I want to thank you for joining me. If you're new to the channel, thank you for finding us, and I hope you enjoy this video and find the channel to be helpful. For our returning viewers and subscribers, thank you for your support. That means a lot to us, and I appreciate all the support that we get. This is not financial advice. I'm not a financial counselor. This is for informational and educational purposes only. Let's dive into the chart. 2014 September, the price was $25.01. It's a quarterly paying distribution. DGRO is our symbol. With our $525,000 portfolio, that would have got us 20,992 shares. I'm going to do this a little different. I'm going to kind of talk about what each of these columns are for you, for those that are new to the channel, and I'll go into some explanation as we go along. Obviously, column A, we have the date, the quarterly date of the payment of the distribution, what the share price is on that date here in column B. Column C, we have what the distribution per share is for that date. Column D is if we're fully dripping, what is our distribution amount? How much is it paying based on the number of shares that we have? Column E is the same thing, but for a 50% drip, how much we're getting distributions when we're buying half of our distribution with new shares and keeping half of the amount. Column F is our zero drip, meaning we're taking the cash, we're keeping the same number of shares we bought all the way through, and we're just taking the distribution as a payout for cash. Column G is our full drip number of shares. So you take column D as you're buying more shares. You can see that accumulating here in column G. Column H is our 50% drip share accumulation. So we take the distribution amount that we're getting here, and we're buying more shares, and that's showing you where your share allotment is there. Column I is your full value. This is the value of your portfolio with the full drip. Column J is the value of your portfolio on a 50% drip, and column K is your portfolio balance with no drip. Then we'll go over here in a little bit and look at these different calculators that we have. But that's the chart. That's what we're looking at. And so coming down column B first, you can see we started at the 2501. And just glancing at it, you can see that this has been a pretty steady growing fund. It has had some dips, just like any fund, any stock would. There's nothing major, though. That's the wonderful thing. As you look at this, you see it growing year over year slightly, never huge growth, but never huge downturn either. As we come up here to 2019, you see that we had got to, at this point, its high of just under $42. Then 2020 hit with COVID. It dropped down to $33. But by the end of that year, it had got to a new high of $44. And if you look at most shares, most ETFs, most companies, same thing happened. They had been hitting some highs right at the end of 2019. COVID hit. The entire stock market went into panic. People thought this is the end of the world, and everything fell. But then as things started calming down, they realized, okay, yes, this is horrible. I'm not minimizing that, but it's not going to be the end of everything. And companies began to make plans and figure things out, and they were able to recover. And you saw that recovery by the end of 2020 on almost all stocks and ETFs. You saw that recover. As you can see, 2021 continued climbing. 2022 was a down year. And so we'd got to our high here. I think it was 55, 56 at the end of 2021. Then it dropped in 2022, got back down to $44. But as 23 and 2024 and 2025 were strong years in the stock market, it continued climbing, and it is now sitting at a high as of the end of 2025 of $69.93. For that 11-year period, actually 10.5-year period, you're looking at 179.61% share price increase. That's a really strong share price increase. And here's where we're going to look at the power of distributions. We see the dividend was paid at $16.90. Now, they're not growing their dividend at phenomenal rates, but because their share price is also growing, and if you're buying more shares, you're growing your payment at a very rapid pace. And we'll see that here in a minute as we continue breaking this down. But the dividend amount that was paid right here, started at 17 cents. And there's a couple outliers for different reasons, and we're not going to get into all that. But you can see the distributions are very consistent. 15 cents it got down to here. Then it climbed up, got up to 20 cents. And as we just keep rolling down, you'll see that these keep increasing. And we got up here, now you're looking at 34 cents, 32 cents, 29 cents. And let's just look at 2025, or 4 payments, 31 cents, 32 cents, almost 37 cents, and then the last one, 44 cents. It has averaged 24 cents over that time frame, but you can see that it has grown. It started at the 16, 17 cent mark, and it is ending here up in the 30 and even hit a 44 cent mark. So that is a great distribution, and it's growing year over year. Not only is the distribution, the dividend growing, but the share price is growing as well. Let's see how that impacts our dividend payment. So on a full drip, we get the first distribution right here. We buy more shares. As we buy more shares, you can see the total went from $20,992. We got this $3,547 payment. We bought more shares at $25.01, and that brings our share total up here to 21,133 shares. What I want you to look at on the distribution, and again, this is just reinvesting it all, so it's compounding your growth of what you're getting for a payment, because you have your dividend growing and you're growing the number of shares you have, which is just adding to the compounding impact of this. So we're starting out here with $3,500 quarterly payments. So nothing amazing. You're getting about $1,100 a month. But as we come down here, you see this growing and growing rapidly. As we come down here again to 2025, we have an $8,300, an $8,700, a $9,900, and a $12,000 quarterly payment. This quarterly payment here, you're looking at $4,000 a month, which is more than you were getting a quarter when you began, because you have added 6,384 shares to your account, and the distribution dividend has grown from that 17 cents up to 35 to 40 cents, which is really compounding that growth. What has that done for your portfolio? Well, you started with the $525,000. As you can see, we've been in the green and just stayed green. Let's take a couple little detours here on the growth. We got up here to the end of 2019. Remember, we talked about that right before COVID. Your portfolio balance was $1 million. Now, imagine you're sitting there back in 2019 in your portfolio, and it didn't have to be DGRO. It was with pretty much any fund you had, and you're sitting at $1 million. You had basically doubled your portfolio in 5 years. That's a good growth. 5 years, you've doubled your portfolio, but then all of a sudden COVID hits and you're down to $800,000. You've dropped $200,000 and might be panicking. You might be thinking, I need to get out of the stock market. This is too dangerous. And that's where people panic sell and they get out of it and they go ahead and they lock in that $200,000 loss. But look, at the end of 2020, you're back up above where you were at 2019. So yes, you went through a dip, but you recovered it if you stayed the course. But people who panic and sell, they lock in those unrealized gains. If you ever look at your brokerage statement, your 401k statement, anything like that, it'll say realized and unrealized gains. Unrealized means you haven't realized it. You haven't gotten it yet. It hasn't happened yet. Why? Because it's still sitting there. Now, if you check it out, you sell it, you get out of it, it'll go into the realized gain or loss. So maybe you've made $100K and you sell it, you'll see $100,000 realized gain, and whatever is still left that was gain would be unrealized. But if you leave it alone, it is unrealized, and so you had an unrealized drop right here of $200,000. It didn't become real unless you sold it, and that's where you need to not panic sell. So that's my little soapbox for today. Gonna stop there. Have you panic sold in the past? I know I have. It was years ago. I got freaked out and I got out of some stuff. I wish I hadn't, but that's a learning process. But the things that I didn't get out of and the things I didn't panic with, those who have watched my videos like SCHD, SCHG, they've done great for me because I've let them ride and I've watched them grow. In fact, SCHD, people have been saying for the last 2 years, it's dead, get out of it. And just year to date, as of the filming of this video, it is up 14% in about 6 weeks. So is that permanent? I don't know, but it's done really well. Long term, it has done fantastic for me. And that's what I'm all about. And so I try to encourage people, investing is a long-term plan. What did you freak out? What caused your freak out? If you did, share in the community below. It's not an embarrassing thing. It's we're sharing with one another to encourage others. And me as an older person, to share with younger people. If you're in your 20s, 30s, 40s, I want to encourage you. You got a lot of time left. Take advantage of that. Don't panic and ride it out. I promise you, the odds are very, very, very high that it is going to not only come back, but go to new highs. All right, so as we see, we continue down. If you didn't panic sell here, let's see where we would have ended up. There are some other dips along the way, but look at that, $1.9 million. If you had panicked here and said, I'm getting out $800,000, now, granted, you would have still been up $275,000 from your initial investment. So it's not like you lost money. But what you did do, unless you needed it, you lost this future value of $1.2 million of growth because you got out of it out of a panic. That is almost a $1.4 million growth because you've been reinvesting these, buying more shares, and growing that portfolio. Think about that. You have quadrupled your portfolio in 11 years, 10 years, somewhere in there. That is fantastic growth. A 264% growth overall. I would not complain about that. All right, so the 50-50 drip, here we go. This means that you're taking the distribution and you're buying more shares with half of it. And the other half you're taking as cash. This amount in this column represents half of the distribution. Because whatever amount you see here, you're getting it twice. You're using the first amount, the 1773, to buy more shares. And we see that here in column H. And you also get 1773 as cash. So you get this amount twice. If you add this up, 1773, and you multiply it by 2, it comes out exactly to $3,547, half of the full drip, because you're getting this twice. That's why it's the same amount as the first zero drip, because it's all the same. That first payment is the same. But what you do with it going forward depends on how that distribution grows or doesn't grow. With the distribution being at 50%, here again, we're double that's the amount you actually get. You can see that even with this, it is growing. And we're just going to come down here real quick to the end. So now you can see at the end, the last year here, you got 3,600 twice, 3848 twice, 4397 twice, and 5341 twice. Let's look at this last one, $5,341. We bought more shares. We've been buying shares, and that brings us 2,985 more shares than we began. You've been collecting the amount here as well. So you've collected $126,000 that you've received in cash. Now, again, that's over a 10-year period. It says $12,000 a year. That's not a living material. You can't live off of that. But if you've been doing this and supplementing your income, very well could have. Or perhaps you're full dripping and now you're saying, okay, now I'm going to retire. I don't have to touch my portfolio. I'm just going to live off the distributions. And look at this. You're getting $8,000 a quarter, $12,000 a quarter. Again, not bad for not touching it and having almost a $2 million portfolio. Again, this is your 50% drip, $126,000 that you received in cash, $126,000 that you also used to reinvest and buy more shares, showing column H. Column F, the zero drip. Each quarter, we're getting this distribution on the number of shares that we bought at the beginning. We're not gaining new shares. As you can see, it grows. Your distribution is getting larger because the distribution, the dividend has grown, and the number of shares stays the same. You're still growing the amount that you receive. So it's a nice cost of living raise. Again, this isn't living material, but it's a nice supplement to your income. I would not consider going all in on any fund. I would not consider going all in on DGRO, but it is a nice fund to be able to supplement and kind of ground your income portfolio, to provide some hedging and to provide some inflation protection. And so just like SCHD, it provides a nice growth rate as you're protecting your downside. Let's just scan down here real quick. Our total returns with full drip averaging 23% per year, 50% drip, 23% a year, and no drip, 21% a year. That is some great growth that we're seeing, and I think that's just something to consider, putting a portion of your investments into that if you want to see some income with some growth with that. Again, that's my opinion. Do with it as you want. I do not own DGRO. I am, as you know, heavy in SCHD. DGRO is one that I've considered adding and kind of diversifying a little bit, but I haven't done that yet. Just want to make that clear to those watching. Coming over here, we have our two calculators. The first one is your percentage calculator. If you like this sheet, you can get a copy of this one and all our sheets down at a Buy Me a Coffee link in the description below. On these, you can change the date that you started investing. You can change the amount right here that you invested. And then you can change here the amount that you're going to drip. So on here, I put 40%. We're going to drip 40%. We're going to keep 60%. Just to see what it does. As you come down, you can see that you dripped 100,000, you kept 149,000, you grew your portfolio by 800,000. It's just a way to play with this to see maybe I want some income. Like here, I want to supplement my income by 2,000 a quarter and just go from there. You can play with it, see what you want. Maybe you invested 20,000 or 50,000. You can plug that in here and then see how much would I want to drip to get the amount I want. Or if you want to do it a static way, here you can put in the amount you want to keep out of your distribution. So I put $1,000. I'm going to change that to $3,000. And we're going to say we want to keep $3,000 a quarter. So $1,000 a month to supplement our income. And where does that get us? We keep growing and growing. We're getting the $3,000 a quarter or $1,000 a month, and we still grew our portfolio by a tremendous amount. But you could do that. Lots of different ways you could do this and play with it and see what you want to do. that is DGRO. Again, what are your thoughts on DGRO? Are you an owner of it? Are you thinking about it? Have you sold it? And again, the big thing on today's video, I want to ask, have you panic sold in the past? If so, what was the fund you sold and why did you sell it? What caused the panic? Was it the pandemic? Was it, 2022? Was there something else that happened? And with that fund, and we can all look it up, but with that fund, tell us, do you regret selling it or was it a good panic? Sometimes selling is a good thing, but you have to know why. I don't sell if the underlying hasn't changed. If my reason for buying something hasn't changed, I don't sell. Because just because the fund's down, that doesn't bother me. Now, if the underlying position, if the underlying formulas, whatever I'm in, changes and I don't like it anymore, then yes, I would sell. But just because the fund's down, to me, that's not a reason to sell. So share with the community. Let's encourage one another. Let's share some horror stories or some success stories on how we've done in various markets with various funds. Thank you for joining me. And don't forget to hit that like and subscribe button. We'll see you next time on Simply Money.